There has been a lot of talk from Jerome Powell and the Federal Reserve about how our current levels of inflation are completely transitory. The only reason that inflation is so high right now is because of our supply chain issues. However, there is a lot of moving parts in our economy, and some things are starting to change. Things are changing so rapidly that now Jerome Powell and the Federal Reserve are singing a different tune. On November 30th, 2021, Jerome Powell and Treasury Secretary Janet Yellen had a special meeting with the Senate. This meeting was to talk about inflation, and Jerome Powell admitted that he is a little worried about our economy in 2022. He then laid out the three things that he is the most concerned with that could have a negative effect on our economy next year. So today I want to talk all about this meeting that Jerome Powell and Janet Yellen had with the Senate. I also want to talk about their new thoughts on inflation and what they plan to do in 2022 in order to combat it. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. The Federal Reserve is in charge of a lot of different things in our economy. More specifically, they are in charge of our monetary supply and inflation, which is directly connected to that. Inflation in the United States has been booming ever since the pandemic took off in March of 2020. As soon as that happened, economic lockdowns ensued, which means millions of people were out of a job either temporarily or permanently. No jobs means no money, which means no businesses are going to make any money either. This meant our economy was on the brink of collapse. This is when the Federal Reserve decided to step in and pump trillions of dollars into our economy in the form of stimulus. This would hopefully keep our economy afloat. However, it also raised inflation to new record highs. Inflation goes up when you print more money. This essentially means that every dollar in the economy is starting to lose value. What that ultimately means is all of the money that you have is losing buying power. Everything around you is costing more, and you need more money in order to buy the same things. So when Jerome Powell and the Federal Reserve decided we needed to print $3 to $5 trillion, that also meant inflation was going to rise too. So if inflation goes up because the Federal Reserve prints more money, and we know that the Federal Reserve printed around $3 to $5 trillion in 2020 and in 2021, then why has the Federal Reserve insisted that inflation is only transitory, meaning it is temporary right now? Well, everyone from the chairman of the Federal Reserve all the way to the president of the United States believes that our inflation is so high because of all of the supply chain issues that we're having. When the economy shut down in March of 2020, that meant that millions of people were out of jobs and nobody was spending any money. From a business perspective, this meant that companies couldn't produce any more goods. They were essentially stopped for months out of the year. Now, eventually things started to pick back up, but demand was still sky high for just about everything. In addition, you had the Federal Reserve printing trillions of dollars in stimulus. So people were getting thousands of dollars in checks and then going out and spending this money. People were getting money even though they weren't working. The reason the Federal Reserve did this is because they wanted to stimulate the economy, and stimulating the economy means that people are out spending money. Like I said, that means that businesses can then get money so they can continue to grow. Growing businesses means you have a growing economy because businesses can then go out and create more jobs. They can also produce more products that people can then buy. However, we started running into an issue when people were spending a whole bunch of money, but companies were not producing enough goods to meet demand. This led to some extreme supply chain issues that we're currently facing even by the end of 2021. And this is the first reason why Jerome Powell is worried about our economy in 2022. The pandemic really slowed everything down. Like I said, things had to close because of social distancing orders that led to economic lockdowns. And when the economy closed, the Federal Reserve had to step in. They lowered interest rates, they pumped billions, if not trillions of dollars into the stock market, buying bonds and other assets, and they had other trillions of dollars printed just for stimulus. If they didn't do that, there was going to be consequences. And if they did, there was also going to be consequences, and they decided to pump all of that money into the economy. And by the end of 2021, the pandemic is still here. The World Health Organization just found a new strain of COVID. This new strain is being called the Omicron variant. and we don't really know much about it right now, and I'm not really going to tell you too much about the specifics of the disease because I'm not a doctor. But Jerome Powell is looking forward to our 2022 economy and is worried. He is worried because if this new variant becomes very strong and puts our economy out of work again, well, that means the Federal Reserve is going to have to step in more. It also means that people are going to be worried about going back to work. As of recording this video, President Joe Biden has come out and said that there is not going to be any more economic lockdowns, at least not right now, at least not that he can tell. Naturally, if there's a virus and people are worried about catching it and spreading it, that means that millions of Americans are going to stay home. It also means that you're going to have a labor force that doesn't want to go in the office or doesn't want to work in some fields where you have to have close contact with other people. Certain jobs you can work from home, like an office job. However, a construction worker can't fix a highway from their bedroom. And we're facing a labor shortage right now in the United States. Around 4.4 million people quit their jobs back in September. They did this voluntarily because they're looking for new employment. They want a job that is not only going to meet inflation, but beat inflation. They also want better company culture, and they also want better working conditions and benefits. I think part of the reason for this is because how the world changed in 2020. People were working long hours and were isolated for a lot of the year. Now that we're starting to come out of the pandemic, people are starting to realize that they don't want to just have a job anymore. They want to have a career that they're passionate about. And in a lot of ways, that is a great thing, but it also creates a major strain on our economy because you have millions of people voluntarily leaving their jobs. That creates a void in the labor force. And that's what Jerome Powell is worried about for 2022. Not so much that people are never going to go back to work or never going to start having these traditional careers again, but that things will be delayed and that could push inflation even higher. If people think that this new Omicron virus is going to get really bad, then they might want to take an extra couple months off of work instead of going back to the workforce right away. And if that happens, our labor force will take a hit, and that means our supply chain is going to get even worse. Obviously, if we have a labor shortage, that's going to cause some major delays in shipping. People can't get items to and from companies or people anymore. It also means that a lot of our stores are going to be short-staffed, which means the first thing that's going to happen is stores are going to cut hours. They'll have less employees and they won't be open as long. And if the window for people to buy things is a lot smaller, then that means you're going to have less people entering your stores. And all the way up the supply chain is going to be hurt as well. President Joe Biden has already restricted travel from South Africa and 7 other countries where this Omicron virus is said to have originated from. The more countries where travel is restricted to means that our supply chain is going to be disrupted even more. And what that ultimately means is that inflation is going to go up and the price of everything around you is going to rise even faster. So not only were we facing a labor shortage and supply chain issues before, if everything starts to slow down again because of this Omicron variant, well, that could put our economy in a tough situation. And if things get really bad, then that will leave the federal government and the Federal Reserve with the exact same decision that they had in March of 2020. Do they spend trillions of dollars helping the American people, or do they just leave things exactly how they are? Well, that's going to come down to a variety of factors. We don't really know a lot of this Omicron virus, so there is a good chance that it's not very strong and it's not very deadly, which would mean that there would be no reason for economic lockdowns. But even if there is not full-blown economic lockdowns, this Omicron variant could slow things down enough and push inflation even higher. This would essentially reverse a lot of the things that the Federal Reserve has tried to do in order to combat inflation. By the end of 2021, a lot of the stimulus and extended unemployment benefits had ended. So it looked like the United States was coming out of this pandemic and all of these fiscal policies could end. In addition, by November of 2021, the Federal Reserve announced that it was going to start tapering its bond buying and asset purchasing programs. This means that all of the money that it has been pouring into Wall Street was going to slowly be coming back, and it was going to end its quantitative easing by exiting the market. This would have been a sign that the United States and the stock market is recovering from this recession and pandemic, Because if the Federal Reserve is exiting the market, that means that the stock market is left to do all of its deals and make all of its money on its own. The only reason the Federal Reserve was there in the first place was because it was afraid that Wall Street was going to crash after the pandemic. The Federal Reserve entered the market after the stock market crashed in March of 2020. And the reason the market crashed is because millions of investors were pulling their money from the New York Stock Exchange. They were afraid of what was going to happen next, and they didn't know when the pandemic was going to end. They could foresee that with everything shutting down, this meant that businesses were going to be making a lot less money. Businesses making a lot less money means profits, revenue, and sales are going to be down, which means everything is tight in our economy. This is essentially what a recession is. So the Federal Reserve decided to pump everything up and start its bond buying program. However, for businesses, this was not the end. As inflation continues to rise in the United States, that means businesses have to start paying their employees more. You might be familiar with the 2 to 3% raise that some employers give to their employees every single year. Typically, the only reason they're giving a raise is to keep up with inflation. If they paid you the exact same thing every single year, eventually you would not be able to afford anything, and you would notice that and quit your job. So a lot of companies will give these 2 to 3% raises because typically inflation is around 2 to 3% every single year. However, in October of 2021, the new Consumer Price Index was released. The Consumer Price Index essentially tracks the price of all things in all industries throughout the United States and see how the price is changing from month to month. Well, it showed that inflation, or the price of things, rose by around 6.2%. That is nearly double what we're used to seeing, and eventually companies are going to have to start paying people even more. In a healthy economy, this isn't such a bad thing because people are starting to make more money and they make money that meets whatever inflation is. However, if inflation is out of control and companies have to pay their employees way more than what is the usual amount, then that means inflation is going to go up even more because now there's even more money circulating throughout our economy. But this goes even deeper than just those three things that Jerome Powell and Janet Yellen are worried about for our economy in 2022. Jerome Powell and the Federal Reserve are starting to recognize that inflation is getting a bit out of control right now. And in order to combat inflation, they are making some huge changes to their policy, and it might start in December of 2021. In their meeting with the Senate, they talked a lot about inflation and some of the things that they're worried about. They also talked about some things that they are going to do in order to stop inflation from rising so fast. One of the things that they plan to do is cut back a lot of the bond buying and asset purchasing that they're doing on Wall Street. Now, I already talked about how they already planned on doing this. However, they're making a big adjustment. They're planning on stopping their bond buying a lot sooner. Before, Jerome Powell came out and said that this bond buying would continue until July of 2022 and would start decreasing by around $15 billion every single month. However, because inflation is so high right now, this bond buying could end a lot sooner. Months sooner. And immediately after the announcement, the Dow dropped by around 600 points. Ultimately, the Federal Reserve and Jerome Powell will decide how much tapering it will do in December of 2020 in its next meeting. But the more tapering that it does, the less Wall Street and the New York Stock Exchange will like it. And there is a few different reasons for this. The first is because all of this money is going to suddenly disappear from the New York Stock Exchange. The only reason that the Federal Reserve was there in the first place was to pump up the market. Ever since the stock market crash that happened in March of 2020, the stock market has hit new record highs. The Dow, S&P 500, and NASDAQ have all hit new record highs in 2021. And the Federal Reserve is partly to blame for that because it's hard to lose when there's trillions of dollars going into the market for basically no reason. And this is a lot of money that these companies are now relying on. Eventually, though, this money is going to disappear. And investors don't like that because now the stock market is going to be on its own. And the second reason is that this move shows that the Federal Reserve is acknowledging that inflation is pretty high right now. The Federal Reserve and our federal government doesn't typically acknowledge when things are bad. The reason for this is because they don't want people to panic. This is exactly why some experts and investors like Bill Ackman believe that the Federal Reserve basically lies to you about inflation and that you should look at the numbers yourself and decide if inflation is high or if it's not. If the Federal Reserve came out and said that inflation is way too high right now, well, that would scare investors. And it would also scare the American people, because the American people wouldn't want to go out and spend their money if they knew everything was going to explode sometime soon. But if the Federal Reserve continues to say that inflation is transitory and it will go away very soon, well, this gives the American people confidence in the money that they're spending. It also gives the stock market confidence that everything is okay, even if things are not okay. But moves like this signal to the rest of the world that inflation is getting out of hand. But it also signals that the Federal Reserve is going to start doing more in order to combat inflation. And our economy may take a hit because of that. When the pandemic first started, the Federal Reserve and our federal government wanted to do as much as they could in order to entice people to spend more. They wanted people to continue to spend money and not save or spend less. If people are spending a lot less money, then our businesses can't grow, which means our economy can't grow. Not only does that look bad from a political side, but it also doesn't help in the long run. So the Federal Reserve dropped interest rates. This meant that people had a lot more access to money because they could go out and get a loan that they might not have been able to afford before. And this is the exact reason why they pumped trillions of dollars into the economy. But in 2022, that may change because now the Federal Reserve is combating inflation. They want things to go down, so they want people to spend less money. Some experts like Phil Orlando have said they believe the Federal Reserve will raise its interest rates around 6 times between now and 2024. This directly contradicts with what the Federal Reserve has publicly said. The Federal Reserve only wants to raise interest rates 1 time in 2022, at least 1 time in 2022. But raising rates and stopping all of the money printing would eventually mean that there's a lot less money in our economy. And that means that people would ultimately spend less, or at least would not want to spend more. That could also mean less profits for businesses. People spending less money means that businesses are going to have less revenue because they have less sales. So the next few quarters for businesses might be a little thin, which means investors are going to get scared and they're going to want to move their money around. And they might move their money from the New York Stock Exchange, which means markets may go down too. But for the majority of Americans, that means that it's going to be harder to get a loan. And that means it's going to be harder to spend your money. And if the Omicron variant creates more labor problems and supply chain issues, that means inflation is going to go up, which may push the Federal Reserve to do even more. Which means consumer confidence may start to go down in 2022 as we see people buying less things. The bottom line here is this. Federal Reserve Chairman Jerome Powell and Treasury Secretary Janet Yellen are worried about our economy in 2022 because of this new Omicron variant. If this variant is serious, it could close down our economy and make a lot less people delay their return to the workforce. That means our supply chain is going to suffer more issues. All of that may push inflation even higher than where it's at right now. And consumer confidence in spending is already very low, which means businesses and our economy may suffer too. That may make the Federal Reserve reverse a lot of its policies and start stimulating the economy again, or combat inflation even harder by raising rates and pulling its economic stimulus from the stock market. But again, this is all worst case scenario for what could happen to our economy. We don't really know much about this Omicron variant as it stands right now, and it may end up being a very weak variant of the COVID virus. That would mean that our economy wouldn't really need to shut down, and consumer confidence could start to go back up. If something like that would happen, then the Federal Reserve and the Treasury would continue with their normal and previously scheduled monetary policies. This means that our economy and the stock market could continue to grow and recover as they are right now. However, I will leave you with this. The Federal Reserve printed around $3 to $5 trillion in 2020 and in 2021, and because of quantitative easing measures, they have racked up around $10 trillion in debt. Ultimately, none of that money is free, and right now, because our supply chain and labor issues are so bad, that is pushing our inflation up to new record highs. However, eventually that will probably go away as demand will drop and our supply chain will improve. But all of that money has already been printed and is already circulating throughout our economy. So inflation can't totally go away because of this. We just aren't feeling the effects right now. Nobody really knows where our economy is headed in 2022. But one thing I can tell you is that inflation isn't going to go away. Many experts believe that it will drop to normal levels by the end of 2022. But experts also believe that inflation is not transitory like the Federal Reserve has been saying. Inflation is here to stay. And somebody is going to have to pay the price for it. But now I want to hear from you on this issue. Do you think that Jerome Powell and Treasury Secretary Janet Yellen are right to be worried about our economy in 2022? Or do you think this Omicron variant will be nothing to worry about and our economy will continue to recover just like it currently is? In addition, what do you think about this new monetary move from the Federal Reserve, deciding that it may need to pull some of its economic stimulus from Wall Street a lot sooner? Is that a great move or a terrible move for our markets? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.